We certainly started the new year with this shock news that no one was expecting about the assassination of General Soleimani. What does that mean for the markets in the next couple of quarters, Burkhard?
What an interesting way to start the year and the decade indeed. Look, what a difference a year makes. This is one of those singular events which we would argue, I've said to you before, you cannot insure them, you must diversify them. Fundamentally, the world economy is in a good place. Consumers are happy and willing and able to consume. Monetary policy remains accommodative. Compare that to where it was last year, and certainly this event will make sure that monetary policy will continue to remain supported. But the melt-up, the center rally that we've seen in markets last year was making them prone to some sort of correction. And arguably, this could be it. This could be the correction which probably gives way to another buying opportunity, because that's what geopolitical crises do. And unless they cause recessions, which we don't think this one will, they give way to buying opportunities. But we're probably not there yet.
Jane, what does it mean for currencies?
Well, I think we've seen the reaction that we would expect. At the top of the table today, we've got the Swiss franc, the yen, and the Canada dollar. The Canada, of course, it's an oil currency. But I think it's very difficult at this stage to really estimate how far this will escalate or not. And the other thing I think we've got to bear in mind is the geopolitical events that we've had in the last few years haven't had as much market impact as perhaps many people would have expected, or perhaps they would have done had the news come out 10, 20 years ago. And the reason for that is the liquidity in the markets. The central banks providing so much liquidity. For instance, if we look at volatility levels, really quite low in FX. If you look at stock markets in 2019 outperformed market expectations that existed at the start of the year, because the market was thinking, well, look, 2019, we're going to get slowdown in global growth, therefore that's going to hinder risk appetite. But with so many central banks providing so much liquidity, actually stocks went up really very high. And I think we're going to have the same sort of function this year when we have geopolitical events creating risk aversion. But on the other side of the scale, we've got central banks providing so much liquidity that it's, again, going to provide a buffer really to that news.